Hello traders, welcome back to my channel. So last night was hectic. I made around 8% from Nasdaq. So the strategy that I use, I will break down everything. I will show you how I execute the trade and how you can use the same strategy to make income from your trading. Okay, most people are asking for the strategy, but strategy alone will not gonna make you money because the strategy is the car, but the mindset is the wheel. Steering wheel, without the steering wheel, you can't go anywhere with the car. So if you even have a strategy, you need to have a right mindset. You need to develop the mindset and how to use this to your advantage. So US 100 or NAS 100 had got a different trading style compared to Forex market. If you are trading Forex and if you wanted to trade Nasdaq had a huge moves. Most of the times had got several hundred pips of moves at single day, which is very good with people are actively trading, especially if you have a shorter period of time to trade. Suppose you have a couple of hours to trade. So I think the Nasdaq would be the best option to trade and get some quick cash out of the market. But you have to understand that it's very volatile compared to Forex. So only pair you can relate to Nasdaq and Forex is a US GBP Swiss franc, which is quite volatile, and gold is GBP JPY. People has traded GBP JPY? They know that how volatile it can get. This is much more volatile than the Forex pair. So you have to understand this is only 100 stocks. So US mostly tech stocks, which is 60% of the NAS100 is tech stocks, which the Googles, Amazon, Nvidia, all these kind of tech companies. So you have to trade with confidence. You have to be careful with your money when you trade this kind of indices because it could be very volatile. The strategy I use to trade this Nasdaq, and I don't trade US 30 because I find it more volatile than NAS 100. NAS 100 suits me. I tried US 30, but it seems like it moves too fast because it's only 30 stocks. You have to understand this is much more volatile than the NAS 100. So the strategy I use very simple, and I will show you in a second how I trade NAS 100. Okay, so suppose you trade Forex, you understand how the Forex market works. Similar to this, it got a move up or down or sideways markets. It's normal. Market can go other than these three moves, right? So move up, down, or sideways market. So you have to recognize which is moving. How you determine you're moving up or down depends on what time frame you're using. Suppose you're using 1 minute time frame, probably in a 1 hour candle, it will be very trending for you because it's a 60 candles makes 1 hour candle. But if you are trading a daily time frame, probably that's a different story. So it's a very what do you call? Depends on the time frame what is trending and what is not trending. To me, it is to trade Nasdaq. You have to get into the smaller time frame. Then scalping is the best option to trade Nasdaq. I scalp myself, and if I trade Forex, I usually use swing trade or intraday trading strategy. So NAS 100 got a typical moves compared to Forex pairs, as only pair can compare to NAS 100 is GBP JPY. Had quite a bit of volatility in there, but US 100 is much more volatile than the any currency pairs. So last couple of days has huge moves up. Usual normal day move is 200 to 300 pips. It can move to 600, even 700 pips or points because it's indices, so it can be pips. So you have a huge advantage to trade this kind of indices, synthetic markets. As you know, this is synthetic market, but if the similar strategies apply to any kind of market. Okay, so NAS100, the strategy I use very simple, as I told you. Most of the time, you'll see that what Nasdaq does is moves in a certain patterns that which is very much you can guess the next move, because most of the time it will create double bottom or double top, and unlike forex pair, it will hold the double bottom and double top because it's quite a huge volume. It can be manipulated that much. I know there is a high frequency trading going on the indices as well, but still, but high frequency trading are based on also the supply demand and support resistance base. So it works. I find it works most of the time unless there is a news event. Suppose the Fed chairman talking, or some kind of news release, suppose NFP or CPI, this kind of data, you have to be careful with that. On those days, you stay away from the trade. Any strategy will not going to work, because obviously it's the news related item strategy not gonna work. Okay, so we'll see that how the market was. Most of the traders understand how the market is. Market moves up and then it stalls, right? So it goes sideways. The sideways moves or a correction, most of the time what I find in Nasdaq, it will create a double bottom. So if you understand this pattern, you can take advantage of the market. Okay. So we can see it is a correction. So sometimes it will, sometimes we're going to create one, but most of the time you'll see that it is creating double bottom, or if in case of reversal downtrend, it will create a double top. So if you understand how the forex market Nasdaq works, and then you can use smaller time frame. So I usually use 1 hour time frame to analyze the market. You can see I will show into the chart, but at the moment I'm just showing you in the line graphs how to understand the patterns. Okay, so this is your double top, double bottom. So most of the times when the market is going, make a double top and come back and stall in this area, you have to understand this will gonna go up, and it is, because it's in daily time frame. Obviously you have to understand that market is bullish or bearish in a bigger time frame. Suppose we are using 4 hour time frame or daily time frame to see the trend. So if his trend is going up, so any kind of correction, it will create a double bottom, and then we're gonna, obviously it's double bottom in a smaller time frame, 1 hour time frame, and you're gonna push up. Same, anywhere you see double bottom, you will buy. And same if you are a short-term trader, that you can take advantage of this kind of move. This probably would be 300, 400 pips. From 300, 400, if you take 200 pips, that's enough for small traders to have enough profit from the market, to generate income from the market, to make a living out of this market. But you have to understand, you have to be very disciplined. You have to understand your money management rules. You have to understand your strategy in and out to able to take advantage of this strategy. So, okay, so you understand how it works. So let's move on to the real life charting, and then I'll show you. I get still. Okay, what is this? Okay, let's not move to this. Now we get rid of all this stuff. So this is US 100s. See what happened here. You'll see the first thing you'll see, this is from yesterday. What do you see? Straight away, you got one trading possibilities that you can do. Excuse me. Market went up, market going down, and went up, right? So this area, and market tries to go up again, and then found this area. So if you, this is 1 hour time frame. So if you move to 5 minute time frame, you'll see okay, let's move on to the chart and then I'll show you how the market works. Before that, I want to use 50 EMA to just show the trend, which way market is going up or down. So if the market is above, in 1 hour time frame, is above 50 EMA, we'll consider it is uptrend. So we'll only buy the double bottoms, okay? So let's put a 50 EMA, and I guess you know how to put 50 EMA. So you have to go to indicators. I have a moving average exponential. I put him on, and then you change it to the period. This is usually comes in 9, and we put it to 50. Yeah, that's it. So the style is, we put it a little bit thicker so you understand clearly. So that's our 50 MA, right? So what do we need now to understand the pattern? We'll look for a correction. Okay. Now we can see that we are in downtrend. This is a correction. So what are we looking for? Double bottom or double top. So this is our correction, and we set this as the first correction here, when price went back up again to this area, right? What do you see? So price went up. This is our correction. Price went up again, and price had to go up again. This is creating a double top. So this is our zone to trade short this market. So let's move on to 5 minute time frame, and then how you can trade this pattern. Let's move on to the 5 minute. Now, what do you see? So this was the previously holding. So we have a downtrend. Now we have a consolidation, and we want price to go up to this area to short this market. So what do you see? So we can see a nice red candle creating in this resistance. You can see this is the candle we've been looking for, and the volume is, look at the volume. Down volume is pretty good. If you want to enter even the second candle, still good. If you want to wait for the, he move, large move, institutional traders, big traders coming in to short this market. You wait for that. You enter short here. Your stop loss is above this. And we wait for our, that's a different strategy, how you exit a strategy, but I will show you how to enter the market first. Okay, so this is our first entry. As you can see how nicely it works. Okay, let's move back to 1 hour time frame again, and we'll see different more setups which are very similar to this pattern. Okay, so we have in this area we can see we have a consolidation. This is not a double bottom or double top, and here we got another double bottom. So market is consolidating around this area, and now we'll move this up and go to the 5-minute time frame, and we'll see how to enter this trade. Excuse me, keep on coming back. Okay, let's move on to the our correction area. First thing you have to see that we have enough volume in that area or not. Okay, but we usually trade on London Open or US Open. This is US 100, so it would be better to trade on US Open. I also trade German index. I usually check on the London Open time. So this is the candle we've been looking for. We look at the volume. It's supporting our pattern. So this is our double bottom, and we have a huge volume to the upside. So we buy in here, stop loss around below this area, and we wait for our exit signal. I'll get into the exit. We have several exit strategies we can implement in this. Okay, so this was our second trade. As you can see, we will see quite a lot of trade using this simple pattern. So if we are in downtrend, see this area, we are below 50 EMA, so we will consider it as a downtrend, even though probably in longer time frame, suppose 1 hour, it is not, but we are trading on 1 hour time frame. Our 50 EMA is the indicator of the trend. So this is our consolidation, and we're creating a double top, and we will enter short from there. Exactly same with result, same thing in here. Exactly same thing. We have a double bottom, we are creating an uptrend. Same thing in here, double bottom, went up. So you can easily use this pattern. You get another one here, double bottom, and then price is going up. Like, so if you understand the pattern, you can easily tweak it in your advantage and use other indicators if you like. And I have more setups that I use, but in this video I'm going to show you only these setups that works pretty good. And if you are consistent, thumbs up for my video. Thank you guys for watching. We'll see you in the next video.